Want to master the art of options trading? Today we dive into the world of options trading, breaking down the essentials you need to know. Imagine it as a strategic game of chess, where the right moves can amplify your profit potential. But what exactly are options? Simply put, they're contracts that give you the right, but not the obligation, to buy or sell an asset at a predetermined price before a certain date. So, ready to explore the best practices and tips for options trading? Buckle up and let's get started. First off, selecting options contracts. It's not just about picking any contract that comes your way. You might be tempted to jump on the first opportunity that presents itself, but hold your horses. There's more to it than meets the eye. Consider the liquidity of the options contract. This refers to the ease with which a contract can be bought or sold without causing a significant price movement. A liquid market is like a busy highway, with plenty of room to maneuver and change lanes. In contrast, an illiquid market can be like a narrow alley, with little room for movement. Next, pay attention to the bid-ask spread. That's the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept. A narrower spread implies a more efficient market, which can mean less cost to you when entering or exiting trades. Remember, a well-selected contract can be the difference between success and failure in options trading. Next on the list, the importance of a trading plan. Without a plan, you're just a ship sailing without a compass. Imagine stepping into a game without a strategy in place. Chances are you'll be left floundering, making impulsive moves, and ultimately losing the game. The same principle applies to options trading. A trading plan is not just a fancy addition to your trading toolkit, it's an essential component that could determine your success or failure in the trading world. So what exactly does a trading plan do? For starters, it helps manage risk. When you have a trading plan, you're not just blindly throwing darts in the dark, hoping they'll hit a bullseye. You're making calculated decisions based on predefined risk parameters that you've set in your plan. Moreover, a trading plan aids in making informed decisions. It's like having a GPS in your car. It tells you where you're going, the best route to take, and what to do if you encounter a roadblock. In trading terms, this translates to knowing when to enter or exit a trade, which options to choose, and how to respond to market fluctuations. And let's not forget, a trading plan helps avoid impulsive trading. It's all too easy to get swayed by market hype and make rash decisions. But with a trading plan, you've got a safety net that keeps your emotions in check and prevents you from making hasty, uncalculated moves. A solid trading plan is your roadmap to success. It guides your trading decisions and keeps your emotions in check. Now that you've got a plan and know how to select contracts, be aware of common pitfalls in options trading. First and foremost, overleveraging. This is when traders use excessive amounts of debt to finance their trades, which can amplify gains but also magnify losses. It's like using a credit card to fund a business venture. If it fails, you're left with a mountain of debt. So, how do you avoid this? Simply put, don't bite off more than you can chew. Stick to your budget and don't let greed cloud your judgment. Next, ignoring risk management. Risk is inherent in trading, but it's not a wild beast to be feared. It's more like a fire. If controlled and managed properly, it can be useful. If left unchecked, it can burn everything down, so don't ignore it. Use tools like stop-loss orders and diversification to keep the flames at bay. Lastly, chasing quick profits. It's easy to get caught up in the glitz and glamour of instant wealth. But remember, Rome wasn't built in a day, and neither is a successful trading portfolio. Patience is key. It's better to make small, consistent gains than to risk it all on a single trade. Avoiding these common mistakes will put you on the right track to becoming a successful options trader. So there you have it, folks. The essentials of options trading broken down and delivered. We've explored the importance of selecting the right options contracts, considering factors like liquidity and bid-ask spreads. We've emphasized the necessity of a solid trading plan to manage risk and steer clear of impulsive decisions, and we've highlighted common pitfalls to sidestep, such as overleveraging and chasing quick profits. Did you find this video helpful? If so, don't forget to hit the like button, subscribe to our channel, and comment with any questions or feedback. Until next time, happy trading!